Overall, I think this was a positive budget, as is very obvious from the reaction that we see from the markets as well as from all the experts who have talked on it. And there are several reasons why I consider it positive. First of all, there's a consistency in the direction that the government is taking, and everything that has been said in the past 2 or 3 years continues to be the thrust during this budget. Agriculture, rural, poor, youth, governance, infrastructure, digital, financial prudence, all the focus thrust that we have seen again this year. There was no sort of flavor of the month that suddenly came in and made it a populist budget, and the finance minister totally avoided being populist in the budget, except of course for the schemes that are across the nation, that are in the rural sector, in the agriculture sector. So that's very positive. The fact that there was a 5.2% financial deficit target that was taken again is seen very positively, because many were expecting and that perhaps the Lakshman Rekha will be crossed this year because of the current economic situation and current need to spur the economy. So that's very positive. The fact that there is a reduction in tax burden for MSMEs, very positive, and overall the thrust on infrastructure is very positive. Also, what didn't happen, which was positive, was a fear that there might be a long-term capital gain, which was in fact scaring the markets. That was very positive, and there was no sort of excise duty increase anywhere. There was no gift tax, inheritance tax. All of these things that people were concerned about was very positive. But I would also like to say a couple of things that I wish had happened. The biggest one of them, in my opinion, is no reduction in across the board corporate income tax. I think the time was right this year to reduce the tax by at least a couple of percentage point, which was expected based on the budget speech 2 years ago, based on the fact that exemptions were removed in certain areas, and therefore it was natural for us to expect a reduction in overall tax. In fact, because exemptions have come down, for many corporates the effective tax rate in the last 2 years has gone up, because exemptions have come down and the headline rate has not come down. So that's a big negative. Also, there was nothing specific for increasing sort of investment, though there are a lot of indirect things that are coming in the budget. 16% less borrowing by the government will make more money available, so that's positive, but nothing direct about increasing investment. And I would say that given that our thrust is on manufacturing, the budget perhaps didn't have enough thrust on Make in India. It was mentioned once about electronic manufacturing, but that amount 700 crore is very little. There's some mention of inverted duty structure being corrected, that the fine print still has to be seen, but I would say that the thrust on Make in India is not what I was expecting from the budget. And one little sort of thing is that increasing the surcharge or putting a surcharge for 50 lakh to 1 crore income perhaps was not needed. After all, the FM admitted there are few people who are paying taxes honestly, and this surcharge is taxing those people who are paying taxes honestly. So it's a very small amount in terms of overall revenue, and I think there was no need to put this surcharge for the income slab of 50 lakh to 1 crore. But overall, I think the budget was very positive, given the various compelling things that need to be done right now. The budget will certainly help us to move forward towards the ultimate objective that we have for economic growth and also for inclusive growth in this country.